Hello everyone. This is the pre-market report video for today, 4th July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. As we know, yesterday was weekly expiry, so Nifty had the relatively volatile day and closed negative despite lot of positive things in the market. Yesterday, around 10 a.m. Indian time, S&P Global released the June month service payment data, which came as 60.4 and it is 10-month high value. In comparison, on May month, the service payment data was only 58.8. Not just the headline, in the sub-index, the data shows overseas demand from Asia, Middle East and US market was really high, which in turn made the employment growth in India to touch the record high and subsequently showed the sustained domestic demand. Then, second positive, one of the reputed global firm Macquarie Capital released the report regarding the Indian financial stocks. And they said HDFC Bank, Axis Bank, Aditya Birla Capital, PFC Shriram Finance and LIC as their top picks in India's financial sector. So for most of the day, those companies traded positive or around flat, but in the final hour, it just gave up. On the other hand, they downgraded the Kotak Bank rating from outperform to neutral, which in turn pushed down the stock by 2%. Positive info didn't influence the stock price action much on that respective stock, but the negative rating downgrade influenced it. Anyway, sector-wise, metal, realty, banks, telecom was down between 0.5 to 1% each, while pharma, media, oil and gas, auto, consumer durables and media was up by 0.3 to 1%. Overall, the advanced decline ratio is 8:9. So roughly same number of listed stocks increased as well as decreased. Then about institution, in the cash market for the fourth session in a row, FI was net sellers. They net sold for 1,500 crore rupees and DI net bought for 1,300 crore rupees. And if you see the participant wise open interest, because of the weekly expiry, 48% of the call options and 36% of the put options either unwound or expired. And because of more number of call options expired or unwound than put options, the PCR ratio increased to 0.99 from 0.81. Hence, please don't take this increased near 1 PCR as positive, as this was just as a result of expiry, and in fact, based on the remaining open interest, proprietary traders become super negative from neutral position on day before. After the expiry, now they are having net 4% of their open interest on the bearish position, and similarly FII have increased their negative stance as they are having net 4.8% of their open interest on the bearish position. And in contrast to both FII and proprietary traders, retail traders are client having massive crazy net 9.6% of their open interest on the bullish position. Then regarding the index future, the change was minor. If required, please pause and have a look. So overall, for both proprietary traders and FII sidelined with negative stance. On the other hand, client or retail traders positioned themselves as super positive. Those were the takeaways from the Indian market yesterday. One more thing, I saw some comments in the last 3 days like recommending me to go back to my old setup, why I didn't make video for 2 weeks and all. So I'll give the quick answer. At present, I'm in India for the holiday, and in the last 2 weeks, due to various small reasons like my laptop playing up, problem in the camera, all prevented me from making the video. Even now, I haven't fully fixed it, just managed to make it to record and hoping it to hold up. And regarding this setup, thanks to my parents and sisters, as they were kind enough to give me this room just for YouTube, even though it was previously locked and used as a storage room. So short answer, for the next few weeks, please bear with me with this setup. Anyway, coming to US, we know 2 days before we discussed this, Trump's One Big Beautiful bill passed on the Senate narrowly. Now last night it was passed in the US House of Representatives as well. So today we could expect the bill to become law in US, which is good from the US market perspective. Then second, on Wednesday night, US market becomes nervous because of degrowth in the private non-farm job addition data for the first time after pandemic related degrowth. Please note that was private data and it's based on their payroll database. Now, last night, US government Bureau of Labor Statistics released the official government figure, and it was direct opposite to what private data mentioned a day ago. Actually on June month, the new number of non-farm jobs added in US was 1,47,000, and it is above the analyst expectation as well as above the May month new job addition. On the above, unemployment rate dropped to 4.1% from 4.2% on May month. So the jobs data is very strong and very good, which US market cheered it, and all the major index closed positive. Dow Jones increased by 0.77%, S&P 500 was up by 0.83%, and Nasdaq outperformed all and increased 1.02%. Regarding VIX, it dropped marginally to below 16.5. In line with the US market positivity, all the major Indian ADRs and Reliance GDR all closed positive of around 0.5%. And if we calculate the arbitrage, all of them indicating approximately 0.5% positive difference. Again, in line with that, GIFT Nifty today early morning, it increased and traded at 25,560. Equating that to our spot market, for now it shows that Nifty to open gap up opening of around 60 to 80 points. The status may change as time progresses, but for now, this is the current state. Just for info, today US market and their future market is on holiday. So if no negative from Asian market, then as a summary, global momentum is good, and in line with that, GIFT Nifty and Indian ADR also indicating the positive opening. After then, same warning as last 2 days, look out for any India-US trade deal announcement. And look out for HDFC Bank Q1 FY 2026 business update. Yesterday, Punjab National Bank released their business update, and as the result, its share price crashed 3.2%, and that's the reason why PSU banks underperformed private banks yesterday. Anyway, as per stock open interest, Nika, D-Mart, Bharat Forge, Bank of India, Solar Industries and Union Bank of India are some of the 81 stocks that got an increase in open interest along with a negative close, indicates the short build. On the other hand, IAFL, KFin Tech, Amber Industries, MCX, Dr. Reddy's and Patanjali are some of the 44 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out. During our market hours at 2:30 p.m., Europe wholesale inflation PPI data is due. Then after our market hours, India's bi-weekly banks credit and debit growth data and forex reserve are some of the items we need to keep an eye out today. Coming technical, Nifty opened 50 points gap up, then for the initial hour it was volatile, but after that for most part of the day, Nifty traded in the positive region above 25,500. However, in the final hour it dropped and closed near 25,400 mark. Thus on the daily chart, Nifty formed a bearish candlestick pattern with upper shadow and with a consecutive session lower high and lower low formation. Meaning Nifty attempted to reach 25,600 mark, but the higher selling pressure in the region pushed it down, and in addition in Nifty, RSI value had the negative crossover and dropped below 60 mark, all indicating the momentum fading and raises the possibility of more consolidation. So if Nifty fails to defend the 25,400 level means, then the next support is expected to be in 25,300 to 25,200 zone. On the other hand, if Nifty rebounded from current level means, then 25,600 to 25,700 will act as the immediate resistance. Then in case of Bank Nifty, it had the similar price action but underperformed Nifty and closed at 56,800 level. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern with upper shadow and continuing the lower high lower low formation. Here in addition to 20-day moving average, yesterday Bank Nifty breached the 50-day moving average as well. So the negative sentiment is more compared to Nifty. Here, in addition to 20-day moving average, yesterday Bank Nifty breached the 50-day moving average as well. So the negative sentiment is more compared to Nifty. Hence, on the downside, immediate support is placed at 56,500. Regarding the weekly options data, the maximum call option open interest was at 25,500 strike, followed by 26,000 and 25,600 with the maximum new call option writing at 25,500 strike and then 25,600 and 25,900. On the put side, the maximum open interest was at 25,000 strike, followed by 25,500 and 25,400 with maximum new put option writing at 25,000 strike and then 25,500 and 25,400. Thus, from options data, it's indicating strong resistance at 25,500 to 25,600 level and strong support at 25,300 to 25,200 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.